Today is August 25th, 2021. It's a pretty good day. Counts up 47,337.83. Western Digital recovered, but today I want to talk about a value play I've been looking at for the last couple of months. It is Tupperware, which is sitting at $24.61 a share. It's $1.23 billion stock market cap, PE ratio of 9.38. Robinhood's usually a little bit behind on their numbers, so I'll check with bar chart and see where they're at. But yeah, they're averaging about $1 earnings per share. So you could see around 4 divided by 24, about PE ratio about 6-7 range. If they could keep these numbers moving forward, you see about 1 EPS per share. And let's take a look on bar chart. So the price earning ratio on the trailing 12 months is 7.47. Price earnings forward is 7.84. And this looks like return on equity is negative 92.73. Return on assets is good, 13.27%. We got a profit margin of 6.45, a net margin of 9.72. Debt to equity is not known. Price to sales of less than 1. Price to cash flow of 6.75. And we'll look at some of the numbers on the income statement. So we look the net income really increased in this last year. You see it went from 12,400 million billion to 112 million. So 12 million to 112 million. So 10x in this last year. Quarter to quarter, we're looking at the last couple quarters. It's been steady around $35-ish million per quarter. EBITDA has been roughly about $90 million for the last 3 quarters. But what we need to look at is cash flow. See, the free cash flow is $138 million on a how much is this company worth? Let's see here. Tupperware is worth $1.2 billion, and we've got the last quarter a free cash flow of $138 million. So roughly about 10 times the price. So that's why they're probably repurchasing shares right now. We could see. Let's also look at the balance sheet. Current assets, $546 million versus current liabilities of $909 million. So that's not a favorable thing right now. But they are repurchasing shares. You can see it's been pretty steady, and the reason this caught my attention is because they issued a very large share repurchase that's going to send the price up. This was back on June 17th, 2021. June 21, 2021. They're repurchasing 22.4% of the company for $250 million. At the time, it was roughly about $20 a share when I was looking at it, so it's already ran about 25%. But just the fact that they're repurchasing that many shares looking forward, and if we could look at the forward P ratio here on Finvis is 6.57. Price to earnings growth ratio of 0.08. Price to sales ratio, price to free cash ratio of 13.13. They're expecting this year to have a 747% increase in earnings per share, and then pretty steady next year, 15% and then 12%, earnings per share growth into the future, which is kind of standard. So return on assets is a solid 11%. The return on equity has not been favorable, but this company is turning around, and this is why I'm looking to take in a small position on. I haven't taken a position yet, but if we look at the price targets, $36, it got upgrade May 7th. Let's look at the value investing at Zacks, the 7.38 forward PE ratio. Any price targets by analysts on tip ranks, 41.50, implying an upside of 68%. So it's looking pretty favorable. So I went ahead and put it into my little portfolio that I'm going to collect. These different value plays. We can see Smith & Wesson Brands is down about 10% since when I put it in there. But you got to give them time. You got to give them like a year. Come back and see where they're at. So Tupperware, I put in at 24.61 today. And it, like I said, it'll be like a good long-term leap option, or even just buying the stock and holding it for a year or two and seeing if it gets that kick up to about $40 a share. But yeah, Tupperware was on my value investing play. So besides just the debt to equity, that current ratio is a little bit unfavorable, seeing that their total current assets of $546 million versus $909 million. So that kind of little bit turn off right there. We'll just kind of put it in our portfolio and see what happens with it. But yeah, they really should be using the money to pay down these liabilities in the short term. And maybe they have. This is the 2020 statement. So let's look at the quarterly statement and see if that has changed. The assets, of course, the current assets is $570 million. The current liabilities are still $912 million. So yeah, that they don't have enough assets to pay all their liabilities currently. So the fact that they're repurchasing 22.4% of their company back, when they should be, using it to pay down some debt, is a little bit troubling. So I'm not actually going to buy the stock quite yet. Now would be the time. I'm just going to put in the portfolio and see what happens. See what happens with these stocks. If they're buying 22% of the company and they got a forward PE ratio of about 8, that's gonna drop them to about 6. And I was reading their competitors, Rubbermaid, trade at a PE ratio of about 11. So that's the potential from just those price to earning ratio analysis of the company going up 50-60%, and you're getting a price target of around $40. So it could give it a short-term kick. You like to see them pay that debt down a little bit more. But overall, it's got, a solid earnings, solid free cash flow. Price to earning growth is favorable. Price to earnings is favorable. And the net PE going forward is favorable. So they've really turned the company around. And, they got price targets of 36. Let's go check what they say on bar chart for the price targets, if there's any more analysis or analyst listing. 3 strong buys right now. Top value stocks to buy for August, it's on the list. Top ranked momentum stocks. So Tupperware, yeah, it wouldn't be a bad buy right now. Let's say high target of 41, medium target 34, and low target 26. So even on the low end, there's still upside potential. So if you're looking for like a lower risk stock that's trading near at the bottom of its possible range and can go up 50 to 60% in the next year, Tupperware might be worth keeping an eye on. Right now, I'm highly invested in Western Digital, and today they released possible mergers. So right now I don't have the money to put it into Tupperware, but I'm keeping my eye on it. I'm keeping it on my list and moving it forward in my value series and trying to see, you know, if these value plays really can compete with some of these growth and equity stocks. So yeah, Tupperware brand. We'll go from there.